record the session. There we go. That's a reminder to me to record the session. Sorry about that, Kyle. If you would like a copy of the recording, please do check out our website in the next couple of days. We will have the recording as well as all of Clint's information. So Clint has kindly joined us this morning from CRA. For those of you that don't know Clint, I'm sure that you've just joined the industry today. Clint has been in the industry for many, 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 many years. He is a specialist community schemes, I would say consultant, Clint, because a lot of what you do is consulting, but on the financial side of things. Clint, your business has been synonymous with community schemes for many, many years, and we've had the privilege and honor of knowing you since our Paddocks days. So thank you so much for joining us this morning. I'm going to hand over to Carl to give you one or two announcements, and then we're going to hand over to Clint for the rest of the session. For those of you, as a reminder, it's a 1-hour session. If you've got any questions, please feel free to post them in the chat function. If there are any questions that you'd like to ask live, just raise your hand or wait until the Q&A afterwards. And then, of course, if you'd like to stay behind afterwards, you're welcome to do so. We'll stay online for a couple of minutes, or send us your questions and comments via email or on social media. That will be great. All right, Carl, over to you.
Thanks, Linda. Good morning, everyone. I hope you're all doing well, and thank you so much for tuning in to our webinar this morning. Like Celinda mentioned, this is going to be recorded and published on our YouTube channel, so please remember to like and subscribe to our channel. If you haven't already done so, could you please also sign up to our newsletter? This way you'll be able to keep in touch with the TVDM Consultants team. We've also just received some very exciting news. TVDM Consultants was one of the lucky winners of the Nedbank Business Ignite competition, and we honestly couldn't be more thrilled. Please stay tuned to our socials to see what exciting things we have planned. TVDM Talks Table Discussion will also be returning next month. This is a segment where once a month you will have the opportunity to ask our consultants any community schemes related questions you have, and this is live, and this feature is only available to paid for members on our neighborhood platform. We'll be releasing the date for next month's live very soon. And then if you're looking for training, then also make sure to check out Strateff and Shasti training in conjunction with TVDM Consultants. I'll post all of these relevant links in the chat. Thank you.
Fantastic. Thanks so much, Carl. All right, Clint, over to you.
Thank you so much, Zelinda. Good morning to everybody. Quite a big turnout. Yes, I didn't quite expect this kind of interest in this topic. And yes, congratulations on that award. I think well deserved. So let's start with that.
Thank you very much.
Thanks also for your kind words. Yes, it does seem a little bit like a lifetime. I tell everyone I'm only 40, but by the looks of things, this is what sectional title does to you. Our community schemes, I suppose, let's make sure we use the more modern term. In terms of how I sort of do presentations, I tend to offend a lot of people. So I offend older people. I can't say old people anymore because I suppose I'm technically getting to that stage. So I offend older people. I offend attorneys. I offend auditors and accountants. It's not on purpose. Sometimes you get caught up in the passion and the energy of what you're talking about, and sometimes you don't quite think. So please, it's a big disclaimer out there, starting in the process. If there's something that you sort of not take offense to, but just sort of sits awkwardly, let me know. It wasn't anything intentional in what I've done. Right, so the whole FIC story, it's been around for a long time, and I'm sort of surprised that it hasn't received more attention or more airspace or more discussion in terms of FATF and South Africa and grey listing. So I think all of you keep an eye on the press. The reason why we have FIC is the Financial Intelligence Centre. They came about in terms of the FIC Act some years ago. And it's all part of South Africa joining the Financial Action Task Force. So I think these days everything is acronyms and abbreviations, etc. But when you start getting into FIC, my goodness, the number of abbreviations and acronyms out there, the list is so extensive. So forgive me if I do misquote one or two of them, but as I said, it's very, very extensive. But I think the part of this discussion, sorry, let me just part of the discussion before we get into the meat and potato of it, obviously, yes, I like my food, folks. So yes, there'll be a lot of reference to food. Is the question that was asked on the sort of intro to the topic is
not yesterday, no. Please, I'm on a web.
Is whether to FIC or not to FIC. Yeah, folks, perhaps please just check the muting. Is to FIC or not to FIC? Because part of the discussion, and I think I was on a webinar with the Mandela Days process, and I may happen to mention FIC in that space, and there was one or two, or maybe more than one or two comments afterwards saying, no, FIC's got nothing to do with community schemes. Why is it sort of being mentioned? And that opened up the discussion, I suppose. And I was surprised that that was the view. I had a more widely held view that most people felt that it was relevant and pertinent and required. But there was a lot of debate post that. And yes, if you contact the FIC and say, must the community scheme be registered as an accountable institution? The answer is no. But a bit later into this morning, I will also explain an exchange I have had with FIC in an email exchange as well. So it's their written view on what I posed to them. And I'll share that a little later this morning. But we need to go back a bit. The debate moved more to managing agents and their view on whether they had to be an estate agent or not. So anyone who registered under the old Estate Agency Affairs Act and the EAB, they would know that at some stage when FIC came into it and the Estate Agency Affairs Board was made an accountable institution, all agents, state agents, were required to register with the FIC. And for those of you that did it, you recall that you originally got an org ID, organization ID. And as the FIC evolved, they then changed that you ended up with an AI, accountable institution, and a list of numbers. So those managing agents that subscribe to the theory or the belief that a managing agent should be registered as an estate agent, you would have been part of this journey or should have been part of this journey already. And in terms of your audits that you would have had for your submission each year to renew your FFC, you would have had to supply your AR number to your auditor, who would have put it as part of their submission to the then EAB. Also, as part of that process, you would have had to do, I think it's every second year, you would have to do a self-assessment. So on the EAB website, you would have had a self-assessment part that you had to fill in, and then it asked you certain questions as to what you were doing about FIC and what training you did, what programs you had, and the whole KYC, not KFC, KYC. I like the KFC, but KYC, which is short for Know Your Client. And we'll talk a bit about that a bit later. So in that space, I thought a lot of this was happening. And it appeared that perhaps it hasn't been. So then comes the new PPRA. And in that, there is this inclusion in no uncertain terms now. So remember, under the old Act, managing agents were deemed to have been required to register if they collected money into, I suppose, trust accounts on behalf of. So there were many agents that said, we operate the client, the body corporate, the community scheme operates its bank account, therefore we don't feel we'd have to, and sort of felt that was their process and didn't register. So there are two schools of thought in that space, and that's not the debate for today. But it's just interesting to understand that you would have managing agents that didn't fall into the old EAB net because of the approach that was taken. So if you were in the EAB, converted to PPRA, that requirement stayed. The new definition of the PPRA very clearly says, managing agents, you're part of us. That's it. You have to be there. I think we've all been on many of the PPRA webinars. Jolene Wasserman presenting all the time, and at every opportunity, she's giving peace of mind to all of managing agents and their portfolio managers that they're trying to register all the other people first, and that managing agents will eventually become registered. And they don't really know what format that takes. But Marion, thank you. Yes, okay. I saw your note. We've got other people other than managing agents on, but I'll explain how that possibly could tie in then with trustees, executive officers, etc. In terms of that. So there is relevance, but I think it's very important that we deal with the part of the managing agents because it's quite extensively involved with what they need to do. So the PPRA says you must be a member. Jolene says, hang on, we're going to get to you and we've got to design your membership and how you register. But now we need to go back to the FIC Act. And all the media and all the hype at the moment about South Africa and their FATF membership. You'd recall probably a year ago now, maybe a bit longer, we were grey listed. So South Africa is the only African country on a member of the FATF. There's only 39 countries that are members. There are a lot of associate members, and if you go onto the website, you'll see there's about 5 or 6 that are busy awaiting their membership approval. There are a number of grey-listed, a few grey-listed, and of course South Africa is one of them, which does affect the country's reputation in the sort of financial space and the financial markets. So as a result of this grey listing, the FIC has been incredibly active. And to those people that are in the net, you would understand or may have experienced what I mean by that. So one of the requirements that the FIC set out was that by the 31st of May this year, everyone that was an accountable institution under this as an estate agent had to do a risk and compliance return, RCR. Again, I'll refer to a lot of the abbreviations. So that RCR, risk and compliance return, had to have been submitted by the 31st of May. There was a subsequent extension to the 30th of June. So that's part of the FIC chasing everyone to show that they're policing it. So we were grey listed as a country because we didn't show enough attention. There were deficiencies in how the FIC managed their various programs. And so the world body said, listen, you're allowing transactions and movement of funds, etc., that shouldn't be allowed. You don't have enough picking it up. So maybe at that point, let's go back a bit further. What is the FIC all about? The FIC is there to prevent money laundering, AML, anti-money laundering, and to pick up terrorist financing activities. So the idea is the world's come together to say, listen, let's stop the proceeds of crime where the money gets laundered, and let's stop money that goes to terrorist organizations that are affecting the world stability, peace, etc. So as an initiative, I think it's an excellent approach, and I think it's commendable that as a country we're part of it. But the grey listing now obviously affects that membership, and South Africa is very serious about staying on that list. So a lot of activity. Again, if you read the financial press, banks in particular have been even more hard hit. So when I first started attending FIC seminars and training sessions, pre-COVID, they were in person. Post-COVID, obviously, is everything online, and it's fantastic, and you get to a lot of people very quickly and easily. They used to share the fines and penalties they issued to banks. And that was more around than banks not doing proper FIC of their accounts and the people behind those accounts. Since then, they don't publish that too much, but in some of the press releases, it is available, and they're running to millions, tens of millions in terms of fines. So, and those fines have got harsher post this grey listing. Also, as part of the amendment to the FIC Act, is the KYC, know your client. For the life of me, I can't remember what it was called before, but there was another term, and they've changed to say know your client. In other words, who's the warm body behind this entity, especially where it's companies, legal entities, trust are a big focus area. And so the banks weren't doing that properly. We all understand. I don't think there's any one of us on this the webinar today that hasn't had that frustration. You need to go into the bank with your ID and your proof of address, and then you get there and it's not new enough, and you've got to come back and but hang on, they want your ID stamped, that sort of thing. So or then you've just lost your ID book and now they want to block your account or freeze your account. So a lot of frustration there. That has gotten worse in terms of the processes. Also, the timing has become more frequent. I don't understand, if you've had a bank account for 20 years and you've got in a few times, you are still the same person, hopefully. But then again, and other nefarious things that happen with what you do with your information online. So understandable with that in mind. So yeah, I do feel, Zelinda, I'm sort of racing along here, and I see one or two questions being posted. I know we will have a question and answer session afterwards, but I'm also happy to start the debate. I might sort of, I don't think we've quite discussed, well, should a community scheme managing agent be registered? So I'm happy to take questions as we go along. I don't want to do all the talking and then someone forget something.
Happy. So what I did say to everybody is that they can either post their questions in the chat, alternatively raise their hands, and then we can acknowledge them during the session, or we can stop for Q&As, completely up to you. Let's ask the question now. Is there anybody that would like to raise any comments or questions verbally at this point? Or Clint, is
Maybe
there?
Can we just deal with Marianne and Sandra's comments there? Yes, Sandra, you're right. It affected SA's ratings with the ratings agencies in a big way. And then Marianne, you've got a good point there, and I'm going to come to that with one or two practical examples of cash threshold reports and suspicious transaction reports a bit later. But that is an excellent point. Where you can't rely on some other entity, some other accountable institution having done their part and therefore you're fine. And the debate, I think, is a little bit more involved with regard to beneficial ownership. So a lot of you, that's another hot topic. And beneficial ownership, by the way, is sort of a follow-on from the whole FIC approach, because they're trying to understand who are the warm bodies behind these various entities. So many of you may have your accountants or auditors contacting you to say we need to update certain records at the CRPC, and that's fine. When it comes to sectional title schemes, there's no CRPC. But who are the beneficial owners? Now, that's a debate that could go on for a long, long time. So I don't necessarily want to have that debate today. I just want to put it out there that if it is deemed that the beneficial ownership is each owner, my goodness, we're going to have a problem. We know of estates that run into thousands of members. So we've got to watch that space very, very carefully. Also, at some stage, I believe the FIC will make an example of some smaller entity. They're making examples of the banks with millions, but we used to say they're not going to come along and then start looking at the other accountable institutions. We all know the obvious ones. Obviously, used car, car salespeople, banks, financial institutions. It makes perfect sense as to why an estate agency would have to be registered. Someone comes along with a briefcase of 5 million rand in cash and buys property. No one does that, so it's suspicious. So someone's trying to launder money and sort of turn it into a legitimate process. I think we must state the obvious. What is laundering? It's a very simple process. Someone has got money from illicit gains and criminal activities, and they're finding a way to legitimize that money. And I'll talk a little bit about that in my view, and I did touch on it for those of you that were on the Mandela Day process as to how I think a community scheme is a little bit of a soft target in terms of laundering money. But very simply, it's just you finding a vehicle or a mechanism so that the money enters the system in a legitimate way. And I think most of you do also know the history of money laundering, in that it was through a laundry process of the mob in America, the Al Capone days, where they did in fact use laundries, and that's part of the history of the term. Right, so I've said a lot in terms of, if you're an estate agent, you should have been a member. Now, managing agents, you're in the net. PPRA says you're going to come and be registered. NAMA is doing great work in trying to establish what that means and how it works, and argue the separate sort of, I think there's 10 different categories now under the PPRA, and how it all fits together. But given what we've said extensively over the last 20 minutes about the FIC and them working towards getting more into the net, I do not believe we can be naive to think that when the PPRA says, here's our registration process for managing agents, that they will then say registering as an accountable institution is not necessary. I'm of the view that when they sort out how that will work, they will very definitely say, right, as part of this process, you have to be registered with the FIC. So I think it's a matter of time, as to how that will work. There's no way that the net will be narrowed. More recently, the accounting and auditing profession, depending on certain of your services, also were required to register as accountable institutions. So if you're trying to get off a grey listing, there's no way you're going to present to the world that, well, by the way, there's an element of risk with this particular type of entity, but don't worry, we're just going to ignore it. Managing agents, you don't need to register as an accountable institution. So the sooner I think we start paying attention to this, if it's new to you, the better with this whole process. So on the basis that you're already on the net and you're probably going to become part of the net, the next process comes, well, what does this mean? So I think if you haven't done your risk and compliance return, get it done as soon as possible. But what we have seen for a few clients is when that return is done, the FIC then comes back and says, hello, here's another 100 odd questions. And one of the requirements with those questions is, what is your risk, your RMCP, sorry, that's not Royal Mounted Canadian Police, it's the Risk Management and Compliance Program. There are many examples on the World Wide Web of these, especially in terms of estate agents, but they are geared to letting activities, they're geared to selling activities, and they're not geared to management activities in terms of the processes. So a whole new approach has to be taken in that space in terms of drafting a fit for purpose RMCP, which is critical. Also, very, very important is you have to show evidence of how you recruit staff and how you assess those staff. So the FIC also had a very extensive webinar, and I think the recording is available. Please do not underestimate the importance of how you bring on board, orientate, whatever you want to call it, your staff members. There is a duty on employers who are accountable institutions to check the background of their staff, to check are they linked to politically exposed people. They talk about PEPs and PIPs, and the PIP is a politically influential person, and then they deal with people who are high-ranking people. They deal with ministers and prime ministers, royalty, etc., etc. So people who have sort of rank and title and political exposure. So you've got to do that whole basis. When you're hiring someone as an accountable institution, you need to be going through a whole lot of steps to verify who and what they are. It doesn't mean to say you can't hire someone who's related to a king or a president of a country or a minister or a mayor, but you've got to have documented what you did, what you found, and how that would expose you and your clients in terms of the FIC Act. So in terms of that process, it's not just know your client, it's know your staff member as well. And that's also been an interesting learning curve with what's happened. And that's a fairly recent development, but don't ignore it. Get started with that space. So carrying on from the basis, managing agents, you need to be an accountable institution. You do all the necessary work, you register, you do the training for your staff, ongoing training for your staff. You've got to show that at least every 6 months there's been training and exposure to it. And especially if you've got new staff, not only have you done your background checks and followed all the processes there, you then have to make sure that they're trained with whatever relevant material is, what your RMCP is at the time. And the RMCP, you have to show evidence of you reviewing it every 6 months as well. And by senior people, so it would have to be your directors or MDs, etc., or general managers of your organization. So the buck stops with the person at the top. Now we come to, and I saw Marion posted there about the MA being very hot on governance, and that's fantastic to hear and see, because that brings us to, if a body corporate or a community scheme, HI, etc., has to be FICa'd, what is the FICA for that scheme? The one wonderful thing about being in bricks and mortar is you can go and do a Google Maps or a Google Earth, and you can literally have that as a document, because there's the bricks and mortar exists. So that's the one of the biggest hurdles out of the way, because you can't create an estate, a body corporate, a retirement village without, you know, the bricks and mortar. Well, you could create it, you could find a fraudulent way, but there is this evidence that you can have. Then body corporate, quite simply, you've got your certificate of establishment or your conveyance certificate. If you're a HIA by constitution, you've got your constitution, preferably with the stamp of the local authority where the constitution applies to. And then obviously CRPC, very simple. You've got, if you're a company that is a PIA or HIA, you can get your CRPC documents. Proof of addresses could be your municipal account, could be your insurance policies, anything that has what your address is on. But again, what better than a Google Maps and a Google Earth just to go with it in that space. And then to Marion's point, the ID and proof of address of people who become trustees. It should almost become a process after the AGM. The trustees are elected, and then you need to ask them for the relevant documents and then put them on file. And again, in terms of your RMCP, your risk management and compliance program, you have to say how you get those documents, where you store them, how they're secured. Of course, you know, we don't want to run foul of POPI on the other hand and all the rest of it. So see, some people have to drop off, but yes, I'll try and get to some of the important stuff a little quicker. Sorry if I'm waffling a bit. So the idea is then you've got your warm body. The KYC is just about a warm body as to who are the office bearers, the people that make the decisions. So I think that's relatively simple in terms of that process and doing that on a regular basis. Schemes should have AGMs every year, so what a pleasure. You're doing your FICA at your office bearers level on an annual basis. So I saw someone talking about cash threshold reports. And this talks to my point earlier about an example of money laundering in a community scheme. So the cash threshold report is now 49,000. They've upped it from 25. And one of the examples that I engaged with the FIC was on exactly this. The managing agent didn't get 25,000 in cash. No one walked into the agent's office and said, yeah, the briefcase, I'm paying my levy. Oh, sorry, in that case, it was 25. I need to correct myself. It is now 49. The 25 was paid into the bank account of the body corporate, and there it said cash. And of course, we all know there's a whole lot of cash deposit fees and everything goes with it. So the point to the FIC was the bank would have had to report it. When that person was at the teller, they would have had to fill in certain forms, etc. Why would the body corporate have to report it? And the FIC's reply was just very simple, because you have to. You are aware of a transaction. And I think this is where that dual reporting comes in, is that what happens if that bank person, that teller is compromised and they don't do it? There's the safety net. Now the agent has seen it and they've reported the transaction. So I'm going to just share on my screen the if I can find it. We all get all excited about what we're going to, there it is then, present, and then we lose it. So here's the FIC website.
Got it.
Very, very nice to go onto it, very easy. And in terms of here on the top right is where you will do your reporting. I'm not going to go into a report now, but the point is, it's the top of mind is right there where you click and you'll go and report. And there's a whole lot of information. You've got to do your homework before you go and start the report in terms of filing it and saving it. And as much information of who you are, who the body corporate or community scheme is, and most importantly, who the person is that it relates to. Now, the person who paid in cash at the bank might not be the owner whose unit refers to, but you won't have that information, so you will just deal with that owner's unit. And remember, the 49,000 is accumulative. So if someone pays 20,000 and then 10,000 and another 20,000 in a 30-day period, that would also trigger a cash threshold report, CTR. Then to the point about money laundering in a body or community scheme, and this would trigger a suspicious transaction, is pay your levies, prepay your levies, or say to the agent to prepaying your levies and pay them a year or two in advance. Now you've got a credit on your levy account. Then you come along, you say to the agent, oh, listen, I'm a bit short, please refund me my overpayment. Now they get a refund from the managing agent on behalf of the community scheme saying it's a refund of levies. The money is clean. Very simple. So it is, I believe, a soft target. And to those criminals out there, you know, sorry, well, I suppose I've just given you the solution, but hopefully all of us on this webinar today will be awake and alive to it. From experience, a lot of international people will prepay their levies because getting money into the country is difficult. And so they do pay their levies in lump sum. So before you go and file a suspicious transaction report, just have a look and see, oh, hang on, this is an overseas owner and they've been doing it on a regular basis because they only want the hassle of all the various paperwork that the Reserve Bank wants dealt with on a once-off basis. So that's the FIC for you. And then one of the other things with this, so this brings me to my next point. So it's not only about cash threshold reports, and it's not only about suspicious transaction reports. A very important part of what the FIC is all about is about this list of known and suspected terrorists. And I just need to pull that up to give you an example. So I did say at the Mandela Day that no South African was on, and I checked again, and there isn't a South African on yet. But that's not to say that it's not possible. So one of the requirements of the Sectional Titles Act is you've got to know who the people that are in the apartments. Now, if you're the bad guy and you know you're on the list, you're not necessarily you're gonna have a front person saying you're the lessee or the owner. But as security processes in community schemes rolls out, one of the requirements is biometrics and it's information. And possibly at that level, the person let their guard down because they want to get in and out of the complex and thinks, oh, it's just a body corporate or it's just an estate. Who's going to pick it up? And at that level, those details that you have should be checked against this list. That is the whole idea of it, is to try and catch those people that are sort of flying under the radar. And in terms of that list, I'm just going to share an example for you so that you can see what it looks like. So this list is incredibly extensive, but there it'll give the person's name, their date of birth, just a brief explanation of when they were listed, their passport details, and then just roughly what they sort of are suspected of doing in the process. So do yourself a favor, go and just check that you're not on this list. Like in the old days, we used to start Googling ourselves to see, you know, how much of us was out there. Well, this is another one where you want to perhaps just double check of whether you're there or not. Again, once you're on the FIC, you will have a you would be on the mailing list, and every second week you get invitations to webinars and what that list has done, who's been deleted, who's been added. Maybe let's just pause here. I see another question. SDS is requiring the body corporate order to express an opinion against strict requirements. Yes, so that's going to be another point to consider, is the auditors have to check that you're complying with these various laws and regulations. And another topic that wasn't really spoken much about, but is another acronym called NOCLAR, N-O-C-L-A-R, and that is non-compliance with laws and regulations. So accountants and auditors have a duty in terms of NOCLAR to report any non-compliance that they become aware of. So effectively, in terms of legislation, professional people have a duty to report to you, which means they've got a duty to report their client to the various institutions. So if there's a community scheme who's managed by a managing agent who is not registered as an accountable institution, that should then be reported to the FIC, as an example. Another example is if you're not registered for income tax, you should be reported to the Receiver of Revenue, or SARS. So that's a very good point, Kevin, in terms of the auditor and their role in doing this. I must say, at this stage, looking at many sets of financial statements, I've yet to see that aspect having been addressed in any sort of serious way by the auditing fraternity. I suppose they're doing it at the client level, where that's the managing agent. And again, and to Marion's point earlier about not being an MA, how does this extend to a body corporate or a community scheme? At this stage, it doesn't extend to that level. It extends to your agent. But then you should be dealing with an agent to make sure that they are managing your affairs, where they're checking you against that list, checking your occupants. And yes, folks on this meeting are fully aware of the nightmare and the pulling out of your hair trying to get those details of those people. Even worse with short-term letting activities. So it's easy to speak academically about it. Practically, it's a nightmare. But that's not to say that you shouldn't then have some attempt, or at least show in terms of your RMCP, that you recognize that it's a risk and that you're doing something about it as best you could. I'm just looking at credit providers that we're not. Yes, credit providers. That's Marion, you're correct. I think I'm just echoing what Marion has said there as well. Fully understand and agree with what's been said there. Zelinda, any other questions or comments at this stage? While I'm just checking my notes to make sure I haven't left off anything important at this stage.
No problem. I mean, you're teaching us something brand new. So it's absolutely amazing. Ladies and gents online, is there anybody that would like to ask any questions out loud? You're more than welcome to raise your hand or put your camera on or unmute yourself. We've had 1 or 2 people that have dropped off due to other meetings, but the bulk of us are still here and very interested. There have been a couple of comments and questions on the chat. Thank you so much. Clint has answered them. Or is there anything that anyone would like to ask at this point? Let me just change my view for a second. There we go. Ladies and gents, no silly question, no small question, or no question too small. No? Clint, back to you.
Thank you very much, Zelinda. I'm sort of checking the notes, and I think we've pretty much touched on everything that I thought was pertinent and relevant to sort of introduce the topic. I suppose, in a way, given some of the comments and the views that some people expressed, prior to this, I thought there'd still be a lot more debate or objection that it shouldn't be necessary. I do also see Nama yesterday sent out an email about this matter and pretty much touched on everything I've touched on anyway. So it's great that Nama also sees the importance of this. Obviously, in terms of that communication, they did say that we waited to see what the PPRA says about the MA. So there's no clarity on that from that point of view. But I have to echo what I said just now. I do not see why they would reduce the net in terms of getting people into accountable institutions. I only see this increasing as they become aware of the risks that are out there and all of the processes that are needed in this. It is, I believe, a soft target for that, for a couple of the reasons I've already echoed and identified. So also in terms of yes.
Sorry,
can I ask a quick question?
go for it.
Yes.
I just want to know, in terms of, obviously with me, I was in both professions. I used to start off as an estate agent, but unfortunately many years ago, before the new regulatory changes. And then after that, managing agent. And at that stage, when I practiced as a managing agent, it was under the what we call the FIC license, or the FIC license of my principal. In terms of the new changes, does each individual managing agent also have to comply the same as the estate agent, and not only the or the management agency itself? Just want to confirm that.
The FIC says that the company is the accountable institution. So it's a company level. But then in terms of your registration and your RMCP, you then have to say who are the accountable people in the organization. And every single staff member, there has to be evidence that every single staff member has been trained on the RMCP that we've adopted and FIC legislation generally. But no, each member is not at member level.
It's not an individual requirement at this stage, as with the estate agents, but just the general in terms of the company requirements.
Yeah, absolutely.
Thanks, Clint.
So again, we're adding another level of compliance to community scheme management, and there's a lot of compliance out there, and people are sort of getting frustrated and saying, well, why? But if you look at what it's all about, it is actually very, very good, and it's very important that it's out there. Especially this, I think this should have received a lot more attention a long time ago, perhaps. But with POPI and PIA tax, I mean, income tax is one of the most misunderstood things in the community scheme. That's a discussion for another day. But yeah, in terms of all this compliance, it is frustrating. There's a lot to be done. Managing agents are really morphing into something a lot more than what they were. The whole sector needs to have a relook at just how they sell themselves to. And I know we've got trustees and owners on this webinar today, and maybe that's an appeal to you just to understand just how specialized agents have to become. It's great to have people like Zelinda and Nicole and their team providing services like this. I think it's a valuable assistance in navigating the minefield. More and more, you're going to see audit reports. You already see the compliance side of things relative to a sectional title scheme. But I believe if you're a community scheme, a retirement village, a HIA, PIA, share block, you're going to find that the audit fraternity, because of NOCLAR, will be reporting a whole lot more in the space in terms of, well, your agent isn't registered. You don't have a PIA manual. You don't have a property manual. You're not registered for tax, etc., etc. So again, in a community scheme, there are incredible benefits. You must never detract from it, but it is going to be a more costly place to live in terms of dealing with the compliance processes. But if done properly, effectively, and efficiently, it shouldn't be too much of a burden. But the protection that it gives, I think, will be even greater than just the physical security aspects that one gets out of this. I mean, a big impact on levies, we all know, has been the 10-year maintenance plan, as an example, to do it properly. But if you consider the value of your asset being protected in terms of it being properly maintained, it's there for all to see. Couple that with compliance to legislation, and I think you have a great scheme, well run and well managed. So then I see there are a few more questions.
Yeah, I wanted to actually just give a comment from my side, Clint. When I started back as a managing agent, the person that I replaced was their compliance officer. And that was the title that was suggested that I take over. And I thought, not a chance. I'm not even slightly interested in a compliance officer. But how important is that role in a managing agent to be a compliance officer, not only for the office, but for the schemes that are managed as well? I think it's probably more than a one-person job. A lot of managing agents have like a take-on specialist, for example. That could also be someone to do this type of thing, to make sure that everything from a compliance perspective is in place, that the body corporate has the rules, the sectional plans, that they're having an AGM, financials, the list goes on. And I think maybe people are a little bit quiet because they're thinking, oh my word, another compliance thing to deal with. Like, is there not enough that we have to do? It's insane. So yeah, thank you for sharing the information with us. Which one of the chats have you not dealt with yet? Melinda, I think, has got a good question there as well.
Yeah, excellent question, Melinda, and it was also touched on in Norma's submission yesterday. No, a body corporate at this stage would not need to register as an AI, but there is a requirement that any person who's aware of a suspicious transaction reports it to FIC. So again, as much as you don't have to be an AI and have an AI number, when you fill in the suspicious transaction or cash threshold report on the FIC website where it asks for your AI number, you would just leave it blank. But it is a requirement that you do businesses generally, and a body corporate, whilst it's not a business, it is a legal entity. And just quoting from the NAMA aspect, or the NAMA submission yesterday, that section 29 of the FIC Act that really widens the net in terms of that. So Melinda, no, I believe you don't need to go and register, but I do think you should check that list that's published on the FIC website in terms of who owns there. And again, you can't say, oh, the conveyancers did it, so therefore they've done that part. They might not have done it. One would assume they would, because they are accountable institutions, but you can't just assume that they did. So check that. And then when people are paying their levies, if it's more than 49,000 in cash or cumulatively over that period, that would trigger a cash threshold report. Martin, yes, I think it's a community scheme generally. So share block, HIA, PIA, body corporate, retirement village. What's the other one? Cooperatives. Yeah. So I think I've covered all the pertinent points that I had listed for today, and there's been some interesting questions. I don't know if there's a bit more. I see we're coming on for just nearly an hour.
You've got one from Kevin Archer.
What is the risk? Sorry, let's just deal with Kevin's question. What is the risk to the trustee? So firstly, well, look, I'd really defer to Zelinda there, but my view is, remember, trustees have indemnity in terms of the Act. So if you've done your part as best you can, you're not a paid office bearer, I believe that indemnity should extend to you, provided you've shown that you've taken reasonable steps to this. And where you're an AR, there's a risk if you don't do it, because then, you know, it's 10 million rand fine, 10 years in prison, etc. But when it comes to a body just reporting something, you're doing the best you can. I believe one can never say no risk, but I think it's extremely low and limited. Thanks, Zelinda.
Yeah, 100% agreed. I actually had a consultation with somebody yesterday that it was a meeting that Nicole, Null, and Matthew and myself had gone to, where in an HAA the members said, surely, you know, the trustees shouldn't be allowed to indemnify themselves for anything. They should always be held accountable. But I mean, then you would never ever have trustees. And as long as trustees act reasonably, they act in good faith, they get the assistance and the advice where needed, they don't ignore something, you know, stick their heads in the ground like an ostrich, they cannot be held liable, and it's only fair for them not to be held liable. But what is reasonable action on in one person's opinion versus another is, of course, up to debate. And that's why we have these types of disputes in community schemes. Ladies and gentlemen, before we say thank you to Clint, is there any other comments or questions that anybody has at this point in time? Any other ideas for webinars or blog posts that Clint can do for us? Clint, you're also an administrator. I know that is a role that you quite enjoy doing and have done for a very, very long time. So if anybody is interested in chatting to Clint about that, that is a role that you do offer. And of course, CRA, I'm assuming, takes on new clients every single day. So that's most certainly a company that they can contact you on as well. What other services do you offer to the community schemes industry?
Zelinda, obviously our sort of again, my meat and potatoes is the income tax work. That's very important, and as I said, very misunderstood. One of the things you mentioned, the word of body corporate to SARS, you know, no one understands it. They think corporate, company, close corporation. You mentioned a body corporate to the FIC, for instance. They think company, etc., etc. So part of our process is trying to get the government agencies and bodies to understand what the client is. If you look at their legislation, they all have legislation that talks to it, but they don't actually train their staff up in terms of what it is, etc. Bodies corporate tax work is relatively simple in terms of the processes, because it's taxed in terms of interpretation at 64, but sometimes that's also misinterpreted. And then the other point with tax, of course, is people seem to think because they don't have any taxable income, they don't have to file tax returns, and that's not correct. You do have to file returns. And again, auditors should be filing NOCLA reports if that hasn't been attended to. So a lot more to come, I think, in terms of that space. We also do forensic work, and that's also always interesting and fun. Yeah, thanks for the opportunity to market myself. I always feel uncomfortable talking about ourselves. So yeah, anyway.
No, we're honored to work with you, Clint, so definitely use the opportunity. So we've had some comments or questions about your contact information. I've shared your website as well as your contact us page, and your physical address and telephone number as well. We will also share that information on the link for this recording of the video too. And then, of course, if anybody contacts us for your information, we'll share it along, no problem. All right, ladies and gents, if there isn't any further comments or questions, we note all of the thank yous. Thank you so much, Clint, for your time. It really, really is appreciated. I'll stay on for a minute or two if there is anything else. But to everybody, thank you so much for joining us, and we'll see you again next month.
Thanks all. Really appreciate having the time to spend with you this morning.
No problem. Thanks so much, Clint. All right, ladies and gents, you're welcome to head off. Otherwise, you're welcome to stay online if there's a question or comment that you'd like to raise, perhaps with a little bit of a smaller audience. Hi, Celia, how are you? You're on mute.
I see Yvette's got a hand up.
Yeah, Yvette, over to you. Just unmute yourself.
Morning, everybody. We just wanted to get Clint and also Zelinda your view on the correspondence